Good morning. This is the Community Revitalization Show presented by RCI Community Funds. And we are going to be talking about several different topics today, all related to community revitalization. And with me today is my co-host, Bill Houston, partner and principal in RCI Community Funds. And with us, we have as our guest Peter Rostovsky, and that's my first attempt to pronounce his last name, so hopefully I was close.
Thank you.
Uh, so this show is all about working with communities that we have labeled disinvested. And other people use the term underserved or economically distressed or some other term. And these terms are all different reflections upon these communities, but we decided to choose a new word, one, because Bill suggested it, and two, we think that this word reflects the fact that the people in the community are not necessarily at fault, or they're not the reason why this community has been passed by. They simply were in the wrong place at the wrong time. And so our goal within RCI Community Funds is to see what can be done to help the people in these communities elevate their quality of life, and to do this through a variety of different activities where they can come together and build community wealth, one resident at a time. So, with that, Bill, I'll let you introduce yourself and then introduce Peter. Thank you.
Okay, great. Thank you for that introduction, Carl. So my name is Bill Houston. I have a company called CrowdMax Publishing, and what I do there is I help consult with small businesses and small scale real estate developers to use regulation crowdfunding or investment crowdfunding, and that's my role at RCI Community Funds as well. I've been in the space since the beginning of 2016. Not a lot was going on in 2016. Um, and since 2021, things have really accelerated there. I've had an opportunity to work on almost 20 campaigns, which has been really interesting. And that's going to be a really good segue into the introduction to Peter and what Peter is doing with a platform called Raiseway. Because one of the things that I've discovered is for a small business, it's not cost effective to really hire someone like me, to help them, to guide them through the process of investment crowdfunding. And I will tell you that if you try investment crowdfunding and you don't have someone to guide you through there, it's difficult if you have someone to guide you through, and it's even more difficult if you don't really have someone to guide you through that process. I've met Peter, and Peter was telling me about his platform, Raiseway, and what Peter has done is he has kind of structured that in a scalable manner. So I give you Peter Rostovsky, who is the CEO and founder of Raiseway.
Bill, thank you. And Carl, thank you as well just for bringing me on. Um, just to kind of like follow up on what Bill was saying, I mean, both of you guys know about the complexity of this process. And for me, like this whole thing started when I was a crowd, I wasn't a crowdfunding consultant. I was a fundraising consultant who was asked to look into crowdfunding. And, I had like, like 4 years by then of working in capital markets and financial intelligence. I was a sales guy. I thought I knew here and there things about marketing enough to do a crowdfunding campaign. And then I realized I couldn't advise on this on the campaign. I didn't know where to start, what to do first. Should I do marketing? What kind of marketing is it? Do we need to get like a separate CRM system? Where do we get the leads from? How do we communicate with all of these customers that this company had? Um, and I mean, the thing that stumped me, I think, like the most at first was like, I mean, all of these questions were real, but the thing that really frazzled me was, well, which funding portal do I recommend? There's like at that point there was over 40 of them. At this point, almost 4 years later, there is over 100 of them. And yeah, like I didn't know how to proceed. Mm, and from there originated the thought that, well, I am not the least knowledgeable person about capital markets or marketing or sales, and I can't figure this out at all. Like, I couldn't even pretend that I could. Like, and if I am in this situation, then most small business owners, most startup entrepreneurs are in a really tough spot, and what they need is like a solution that takes them throughout the entire process from I don't know anything about crowdfunding to the point of, I've been reporting to my investors for a few years. And the thing that like I really don't want people walk away thinking about us is that we're like a funding portal. Like we don't have the ambition of anytime soon of becoming a funding portal. Right now, it's just a toolkit to go through the process. If anyone goes on Raiseway.app, I mean, I invite you to do that, but unfortunately, we're a company that I am very suspicious of venture capital in general, and so our growth has been stunted in part because we've decided that if we are to raise money, we should raise money with investment crowdfunding first, and then we're like, oh wait, it's very difficult. Uh, and so now we're just building tools for our own raise, essentially. So right now we have this gigantic data um, platform, but hopefully later we'll build a CRM system, AI tools to write the text of the crowdfunding campaigns, um, tools for consultants like you guys to get into the campaign and manage other people's campaigns through us. So hopefully that will increase your ability to handle more campaigns at one given point in time. Um, but yeah, I mean, I'm sorry, I took too much time telling people about myself.
No, I appreciate your comment about not taking VC money to support a crowdfunding. I sometimes get a little crosswise with some nonprofits who are advising for-profit businesses on how to get up and running. So I'm like, aren't you confusing everybody by being in a nonprofit mode while you're telling people that they should go out and start a for-profit business? It kind of creates a mixed message, kind of a statement. Um, Plus, if a venture capitalist is stepping into this area, I would be concerned that they don't know what they're doing or investing in, because crowdfunding hasn't quite reached the point of being that breakout hockey stick type of a business at this point.
I mean,
Um,
I welcome some VCs looking at this. Like, I really want them to be in the space, especially because it kind of like evens the playing field for them and the retail investors. Um, I would love to see them get into actual.
Yeah.
so,
So Peter,
yeah, go ahead, Bill.
Yeah, so Peter, I appreciate your introduction. It was a great overview, but let's drill down a little bit more into the specifics. Like, what market are you targeting? Right? Are you looking at businesses that may have rapid growth that are looking to raise $5 million with Reg CF? Or are you looking at smaller local businesses, which would be our focus at RCI Community Funds? Can you explain a little bit of that, a little bit of your thinking, give us some statistics on the opportunity that crowdfunding provides, and why your platform is going to be a really good fit for, working with
And,
people like us who actually, right, are looking to get into these communities.
and Peter, you
Oh,
only need
hopefully it
to
will be a
answer
good
one of
fit.
those questions at a time. So,
I am very easy. I don't think I can. So uh, I guess like starting with the target market, right? Like really looking at the smallest of businesses, from micro businesses to people who are raising under 100K, maybe 100, under 150K. Everyone for whom hiring a consultant doesn't make sense. It's just like they can't financially they can't handle it. Like if you look at, I think it's like there's Morgan Stanley's think tank that released some data on how much money a regular small business has on their hands at any given point in time. I mean, if we're looking at the vast majority of them, at the cafes, restaurants, and those are the businesses that predominantly use investment crowdfunding because they're fundamentally social. So these businesses at any given point in time have usually at most 5K on their hands in their checking account. If a crowdfunding consultant costs them 2K a month, it's you know unreasonable to expect that anyone is going to use this. They really need a service that will cost them $20 a month. And I mean, ultimately, that's what we hope to build. Um, as a matter of fact, we're making the learning management part of our platform completely free, and we're just going to price the CRMs and all of those like more complex tools with the point of lowering the barrier of entry to the people for whom it sucks the most, right? So undercapitalized entrepreneurs, underinvested entrepreneurs, whatever term we use here, right? Like, it's these are the people who are not interesting to the big banks. The big banks have been consolidating for the last 30 years. It's a 68% reduction since 1980s. The number of big banks. Excuse me, small banks. I mean, it's the small banks historically have had a much better review score from small businesses. They have fewer problems, better interest rates, better terms, more transparent, more predictable, etc. But they're being either bought out or pushed out of business through regulatory capture. And what you have now is, the large banks are dominating the scene, and they are providing some of out of all the lending options, they're providing the least approval rate. They're not interested, after acquiring all these small banks, they're really not interested in these sub 100K loans. It's not worth their time to underwrite. And so we have this gigantic amount of small businesses, 33 million small businesses in the United States, 71% report being underfunded, undercapitalized. Well, I mean, the statistics is baffling, right? About 21, 22 million small businesses underfunded. 10.2 million applied for some kind of form of credit in 23 and 22. The numbers are not very different for the 2 years. 7.4 million were either fully or partially rejected. And how many businesses used investment crowdfunding in the same year? Well, if we're looking at like small business debt crowdfunding, like 300 businesses, not in 300,000, just 300, right? So, I mean, Honeycomb Credit has recently raised money. That's good. Unfortunately, main desk collapsed. That's bad. But like in general, funding portals are just not covering the needs of the small businesses. They're not capable because they have to like split their attention three ways, right? Like investors, the person raising money, and the regulators and all these other compliance issues. They're unable to provide a full solution to the entrepreneur, and they really need everything. They need CRMs, automated messaging, tracking all the people that they've reached out to. It's tough, and so for us, the main market is really the people who would not get credit otherwise, right? Like they would go to an online lender or, God forbid, merchant cash advance, and they get effed in in fine print. Like this is the most high quality capital that there is. It's just really hard to raise.
Yeah, it's been one of the problems in the capital industry that you're either supposed to go out and raise money from friends and family in equity or go to the local bank. And almost any startup, any small business, their risk profile is so high that banking is almost not even available under any circumstance. And then at the same time, they're not making enough profits that they can give up any significant portion to an angel investor or someone else and be anyway competitive with companies that are making a lot more money. So, and yet this group that we're talking about makes up somewhere around 80-90% of all the businesses that are out there. When we talk about the tip of the iceberg, the tip is all the rare examples that may qualify for angel funding, and the vast majority of businesses are trapped between I can't get banking and I can't qualify for an equity investment. Before we go forward, we do want to both encourage our people in the audience to comment, and we have one already. We have Omar saying, "Good morning, guys. Happy to catch this show." Omar is part of my network. He puts on his own LinkedIn live shows. He had me on as a guest on Sunday, where he's doing the life of Carl Dakin, which probably drove down his ratings because it wasn't, I'm not that interesting of a character. And we seem to have lost Peter here temporarily. Hopefully he will be right back. So Bill, while we're waiting for Peter to rejoin us, what do you think is the key thing here in what Peter's doing? And Peter says he's back, but he's not showing up on my screen. So let me try to reset. And he says he's backstage, and I'm not seeing him. There he is. Okay. Peter, sorry for that.
My apologies.
No. It's nice to know we have a mute button on this show somehow, so we can use it when we need it.
Looks like you're looking at me when you said you have the mute button.
Yeah,
That's usually for me.
because Peter wasn't here. But anyway, yeah, we're dealing with basically the vast majority of the people that need help with crowdfunding, investment crowdfunding, are not served by any other capital market. That's why when this law was passed, it appeared to be this breakthrough between people who needed capital and had nowhere to go, and allowing 97% of the population who are not accredited investors to enter into the capital market and create this pairing between the two. And as you said, Peter, telling somebody they can go do crowdfunding is like also telling them, a word that they don't understand from a foreign language. They kind of look at you and go, "What? What does that mean?" And there's a whole bunch of work to be done at that point. So
Yeah, it's like the way that I usually explain it. Right. Yeah. The way I
Looks like
usually
Peter's
talk about it is that, like, okay, if you're telling someone to do a crowdfunding campaign, fuck. Okay. I think maybe I'm back.
yeah, we're getting a bit of a lag here. Can you hear me, Peter?
How about I can hear you? Yeah,
I
I'm
can,
just seems like
well, we can hear and see you as well.
um,
It's like pictures of Loch Ness Monster at this point. They're fuzzy from 5 miles away, but go ahead and talk and we can hear you fine.
okay. Um, yeah, so the way that I usually explain investment crowdfunding to people that like don't know what it means to actually do it. Well, the easiest explanation is, well, you're gonna do an omni-channel conversion investment marketing campaign. Uh, that's very like time bound, and like I think that's the easiest explanation. Just it's a word salad that implies a shitload of work. and and I think that usually scares people away, and I think it's not a bad instinct to be afraid of doing this. Crowdfunding is risky in terms of how much capital you're going to spend, the risk of public embarrassment, and it's not just embarrassment, but it's actually loss in social credibility if you mess it up. So it's kind of like a high reward, high risk type situation. I think for a lot of businesses, at some point I tried to reach out to people that successfully raised investment crowdfunding campaigns. I tried to collect user interviews, and I, no one really wanted to talk about it. And those that failed, or like I saw some businesses who closed down after they've done investment crowdfunding campaigns, and they weren't, like some blockchain, God knows what. It was like, restaurants and cafes, and I just sensed disappointment in there when I actually got some people to speak to me.
So
It's not
Steve,
without
did you
risk.
join our conversation this morning? I've got you. Good morning, Steve.
Hey, good morning. I'm sorry. I thought I was backstage listening in, eavesdropping. Didn't mean to, crash the parade here.
Hey, Steve, good to
So
see you.
Steve
Hey,
is one of
Peter.
the other members of RCI Community Funds. We all take turns co-hosting the show, and so today, Peter, you're just outnumbered 3-1 on this interrogation, and that's
That's
the
a
way
good
we
company.
like it. So, but yeah, I'd like for you to explain a little bit more, what you're talking about, Peter, there about how people are blocked out or essentially they have to figure this out. And at the same time, this is their only choice. So it's one of those kind of hard points for a small business owner where you're going, you have no other choices. And this one is complex and hard and risky.
Yeah, and there is this kind of truism that is said sometimes in the industry that like before somebody does an actual investment crowdfunding campaign, after learning about this instrument, 12 months, 14 months, 15 months pass, and some people never do it actually, and that's the majority, and that's this kind of goes into the myth that we have on the industry. One of the myths of the industry is that if we let everybody know that it exists, people are just going to be like, "Oh my God, it's amazing! I'm running a campaign tomorrow." Doesn't happen because people look at it and say, "Oh my God, that's a lot of work. Oh my God, that's more risks, and I don't know how much money I'm going to spend on this campaign, and I don't know how much money I'm going to end up at the end with." Maybe, and also I'm like opening the guts of my business and my personal life to hundreds of people and begging people for money, like just all of these factors start to build and people are like, oh no, 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 I'm not doing that. And so I think the only like the solution that I've seen that people have in the industry is like, okay, crowdfunding campaign is tough, you gotta like buckle up and grit your teeth and you're just gonna push through it. And some founders are fit for that. Some people are like these fighters, these like bulls that are down with this agenda. But the majority of people aren't attracted to the struggle. And I think for these people, what's really needed is kind of retelling the story, reframing, right? It's like for my company, the marketing at some point used to be, we make crowdfunding easy. Bill and I spoke about this. Like it ain't gonna be easy. Just even if you reduce all of the logistics of the process out of it, right? If we simplify all of that stuff with automations on our platform, which it's not there now, even if we did all of that, it still would not be easy from the sheer emotional pressure of the campaign. So the reframing has to be, it's not that it's easy, it's that it's a transformation of the business. You're transforming your business from this thing where like you are alone in this like, in this very cool, very difficult world, of running your own small business, and suddenly your business becomes, you open up your business. Yes, you have to disclose information. Yes, you have to disclose like stuff about yourself, but you're transforming yourself and the business with you into something that's community based. And you know that's, I think, is a much more sellable story than, hey man, it's going to be tough but you're going to get some money at the
Yeah,
end.
Carl,
And especially this goes into the, yeah, go ahead.
I'm sorry, I didn't mean to interrupt you. I thought you were finished. Carl, I want to say this really quickly, and I think Peter can speak to this about the value proposition of Raiseway. So I read an article yesterday, and I think it was titled something like Reg CF Exposed, and someone sent me the article and asked me what I thought about it, and I said yes. The things in there are absolutely true, and it's a job description for me, right? That's all those things, right, are why I bring value. And to Peter's point, um, being able to scale that value at something that is cost effective is the real value that I see in Raiseway, because all of those things are true. It is very difficult. There's that emotional risk. All of those things are very true. But you couple that with the fact, if you don't do this, you're not going to get any capital from anywhere. And I think what Raiseway does is it gives you an alternative to tackle this. And the last thing I'll say is what Peter just described is what I like to call being crowd fit. That you are ready to be crowd funded. And I think that taking that perspective for business owners uh, really helps them to look at the process that they're about to take on from a different perspective.
Yeah, I agree with that, Bill. I mean, I've been highly critical of the majority of effort that has been expended so far in investment crowdfunding, because it seems to be totally directed towards getting angel investors to invest in small businesses, which I consider to be a terrible mismatch. And it's like, isn't like the angel investors don't have a dozen different ways that they can put their money to work in different places. But I've written papers and I speak out about this a lot, that an angel investor on average is going to do 10 to 15 different investments at a time at about $25,000 a piece. And we're telling them to set their entire modus operandi aside and make $100 to $1,000 investment in 100 businesses instead of 15 businesses, because that's good for them. And most of them are going to reject that pitch out of hand because they're like, that doesn't make any sense to me. And the purpose here was not to allow angel investors one more way to invest, but to enable everybody on the street, the 97% who are not accredited investors, to invest in a business in their backyard. And yet then the other critique I have is we still pitch crowdfunding investments like we're pitching to angels, when that's no longer our target market for investment. It's everybody on our block, everybody in our neighborhood, everybody who shops at our store. And so I did a presentation at Super Crowd Chicago with Devin Thorpe's group earlier this year, where I talk about my approach, which is at the consumer level, where I treat the customers of the business as the primary candidate for investment. And I start bundling the products and services of the business with some kind of equity or rev share or promissory note, where the products and services are the primary benefit of the investment, and the rest of the stuff, the securities portion of it, is a secondary thing. Because when you change to the people on the street, they're not sitting on a bundle of money in their bank account waiting for the right opportunity to come along and throw money at it. They're pulling money out of their weekly household budget. And if I can show them how they can save a few bucks while also building wealth, now I think that we're getting on the right track. And one of the things that Bill is a champion of, I'll let him speak to this more, is this concept of community capital, which is that in these underserved, distressed communities, they simply don't have mechanisms to build wealth. They're told rent an apartment forever. You'll never have home ownership. Oh, by the way, none of the employers around here have an employer participation 401k program, so you're not building wealth through your work, and you just keep going down the road. Nothing changes. I mean, and these people, or we talked about the opportunity of living in the United States of capitalism. They simply aren't given any options on how they can build wealth for themselves. And Bill, if you would explain the concept of community capital and put it in the context of crowdfunding, I think that would be helpful.
Thank you, Carl. So when I think about community capital, that's being able to source this capital, this investment capital from people who live in the community. Again, when I talk about the crowd fit, and Carl does a really good job with this, is what we're talking about. Peter spoke to this, and what we're talking about is we're changing the complete paradigm here, right? So I'm not preparing my business in my business plan to take it to the bank or to an angel investor. I am preparing my business, my pitch, to actually take it to the community, to the customers, and show the customers that there is a mutual benefit in them becoming the bank for a business that is in the community, right? So not only are they going to get the products and services that I offer, but also, they're going to get an interest payment or a revenue share. I'm not even sure that equity really applies to those businesses. And now it makes sense for me to be able to go to this business, support that business, because I'm going to get something on the back end of that business. If I may, Carl, I'll tell a really quick story that you and I were talking about backstage. And there was a store that people in the community were pushing really hard for here in West Louisville, and they were going to do a community capital raise through investment crowdfunding, and the foundation and the city kind of stepped in and gave them the money to start this really small store. Well, people didn't support the store, and they were like, "Wow, we pushed for this, and then people not." Why would I support that store when I can continue to go to the other stores that I've been going to, because there's no financial benefit tied in, right? I don't see the community wealth, and I don't see the opportunity to build personal wealth by supporting the store, because I don't have a vested interest in that. And that is the power of community capital through investment crowdfunding. And the value that I see with Raiseway is to be able to do that on scale, right? And to bring on a number of small businesses to go through this process in a very cost-effective way. Can you speak a little bit more to that, Peter?
Yeah, something that I guess like for a few months I kind of felt a little maybe disenchanted with crowdfunding for a moment. I had this moment where I was like, and all of us have had that. We know. But so I had this kind of situation in my brain. I was like, okay, fundamentally, I believe in investment crowdfunding. I believe that community capital, local capital is super important. I believe that that's maybe the only instrument that there is to compete with the, Walmarts and Starbucks and McDonald's and KFCs of the world. Because, my connection with these, my association with these restaurants that are fast food is that you're never going to run a birthday party there. I have run birthday parties at small businesses for myself, for my friends. I've run stand-up shows and indie music shows in Brooklyn at local small businesses. A McDonald's is never gonna let me do that. Community does not form around corporate chains. However, they have no problem of accessing capital, so they're encroaching on all of our livelihoods. Starbucks opens in your neighborhood, it's over. The rents are going up all the other non-corporate businesses are going to get pushed out. The corporate businesses are going to move in, underpay the staff. The profits will be drained to the Cayman Islands, and it's just plunder, essentially, by other means. Small business capital is the way to beat this, or at least to try to fight it. But then I was like, well, wait. If a small bit, let's say that we have a cafe that wants to open another location, and that location is either they're going to move into that or Starbucks will. Well, of course, Starbucks will have the money. If this cafe maybe like knows about this before the Starbucks scout managers, then maybe they have a chance if they can raise the money from the community. Let's say that they need 100K for that. Well, what if it's an already impoverished? Spanish Harlem. I lived in Bed-Stuy, in Oakland. I think I'm maybe disconnected now. Check, check.
Yeah, we can still hear you, Peter.
Yeah, we can hear you.
Checking.
Yeah, I can hear you. This is one of the fun parts. So, Steve, good morning.
Hey, how you doing? I'm literally a fly on the wall on this episode. Oh,
so Peters says he's here, but he's not showing up on the screen, and we'll see what we can do to get him back into the picture, as we say. I see where it's at. Okay, there we are.
Okay.
Sorry,
let me just finish that thought that I had. My apologies, really. I don't know what's going on with my internet today. So my thought was, well, like I lived in Oakland, I lived in Bed-Stuy, in Spanish Harlem, and all these places that like just the community doesn't have money, right? Everyone is living paycheck to paycheck. Even carving out $100 once in a blue moon for a business in their community that's raising cash is borderline impossible in many of these situations. So what occurred to me is that, well, we really, like, unfortunately, we can't avoid institutional capital in crowdfunding. We need matching funds. And my theory that I'm working on now is that we probably need these matching funds from banks. We basically need programs. I mean, what you guys are working on, I think, kind of enters that space of combining institutional capital with retail capital. What I'm thinking about with banks is that, like, well, the benefit that they have is they already have all of the loan applications, and they have everyone that the banks have rejected. So they could go to everyone that they've rejected and say, hey, do you want a lower interest rate? If you're able to raise 50% or 30% or whatever it is, first from your community, and then we'll match the rest. And for them, that's an opportunity to also engage brokerage clients so that they can make brokerage fees and etc. But yeah, like what's been on my mind lately is that as much as I want to ignore institutional capital, as much as I tend to not trust it, it's so necessary. And I think one of the best candidates for that are for like being the institutional capital that works with the retail investors from the community, that works with the community capital, are pension funds. Like public or private pension funds, we're basically telling them to auto invest 1 million, 10 million, $20 million, which is less than one of their private equity checks that they write each year. To auto invest that together with the okay, now I'm back. Yeah, so shit. I'm sorry. But yeah, so that's the logic, right? Like we need institutional capital. We need to engage it with these campaigns because the communities themselves don't have the money.
Yeah, so we are concerned with that as
My
well
spiel is
as
over. Thank you.
yeah, we're putting together a community investment fund. We recognize that one, we want to start with as much money as possible from within the community as a base or foundation, but it's not probably going to be large enough to do everything we need to do. And so we are looking to external investment at different points along the path. So in raising money into a community investment fund, we're going to be talking to foundations, we're going to be talking to individuals, financial activists, impact investors. And then as we step into the community to make our investments, we, like every other small business, are going to want to work with the financial institutions and say, if we put up 10% of the money, would you put up 90% in financing of some kind? But I have worked with in the past SBA lenders where I've said, would you give me a loan commitment if I can raise X number of dollars in equity or some other cash form? And they've been willing to do that. And as you described it, one, getting a commitment for the back end financing makes the front end financing or capital raise that much easier. And if you could get a lower cost of money, then in your capital stack, which is a combination of two or more types of capital, now you've got enough money to do what needs to be done. So I do think that we are going to be dependent upon a variety of different capital sources as we try to get this whole thing started. And as we then begin to deploy capital in a community, we're going to be talking with foundations about program-related investments or debt financing at lower than market interest rates. We're going to be talking to banks about actually fulfilling the Community Reinvestment Act that they're required to conform to, but seldom do. Because one of the very points you made earlier between local banks and national banks is a national bank is no different from Walmart or any other big box store. The profits leave the community. And even though the government has mandated that some of those profits be reinvested back into the communities, these programs are not well enforced, they're not well regulated. And the consequence is that if you don't have your money in a local bank, a local credit union or something, that money probably is leaving the community and not coming back.
Yeah. Yeah.
Carl, could you speak a little bit to your integrated community capital idea combined with the mission of the RCI Community Funds and how those two concepts are going to work together to help the small businesses in the actual communities?
Sure.
You read my mind, Bill.
Yeah. And I have no idea what's going on with my camera right now. I think I switched. Yeah, I did. My computer,
There you
my
go.
computer switched cameras on me. That's why I'm confused about why am I so short all of a sudden. I thought Bill got taller or I got shorter. But interesting. The the point is that when you make an investment into a community, into a singular business, as much as that's a success, that's like one brick of a wall of bricks that's needed in order to solve your particular problem. And so as we are working with, invite Peter back into the conversation, as we are working in a community, we are looking at how do we not only build bricks, new businesses or help existing businesses as a primary metric for how we go about helping a community, but we want all these things to work together. And we've seen a lot of different programs out there which in and of themselves are well designed, well implemented, and sometimes well funded, but they're operating almost in their own silo. They're not working in a complementary, synergistic fashion with all the other programs. And we put out a newsletter, which I'll do a shout out for that right now. Where did I put that? Here we go. we have a newsletter that we put out once a week on behalf of our group. And yesterday, the feature article was on integration. And it was talking about, as an example, a housing project that is out there that is setting everything up. So there's wealth building by individuals through fractional ownership between the government and the homeowners. But the whole article failed to explain where are the jobs at that can pay the mortgage for those houses. And ultimately, what we're looking at when we come into a community is we're saying, yes, we're going to invest in a local business, but oh, by the way, we want that business to have your workers working with the residential property we're working with. We want those businesses to be working with the commercial space we're investing into. And yes, we're also wanting the businesses to support somehow, some way, the community properties that we are going to be working with, so that all these things are complementing each other and elevating the likelihood of success of each of the individual components. And kind of going back to your original statement, Peter, is that for a business to engage in crowdfunding, they have to kind of go through a transformation, which in my mind parallels what we're doing at the community level. And they're almost part of the same thing. Is a business can't think of itself as an island or as an oasis that is self-sufficient out there in the hard, cruel world. They need to be thinking about how they work with everybody else, how they support everybody else, all their customers, the relationships they build, the community at every definition of community that exists. Because if they do that, if they start thinking community-wide and where they fit into the community, then that sets the table for the community to think about supporting that business and funding that business to move it forward. And I think that this is a major mindset reset that has to take place.
Yeah, and it's like it needs to connect to people that a small business in your community is exponentially better than a corporate chain for those reasons that we discussed before. Profit staying in the community. The small business owner takes the profits back home, spends them at a local cafe, local grocery store, etc. Right, so it starts to circulate. Then the small business doesn't evade taxes like the corporates do. So the schools are getting better, the roads are getting better, the hospitals are being built, etc. Right, like the health outcomes, mental health outcomes are just generally better in the community. Small business doesn't underpay its workers because, well, I mean, sometimes they have to, but it's not because of because the corporate is reaping all the rewards out of other people's labor, right? And one other thing that I wanted to add that we don't see that being discussed in our industry very often, but I would love to see more co-ops doing investment crowdfunding and more co-ops coming out, because when a small business is just like the founder and the auxiliaries, so to say, well, then it's just the founder or like the co-founders that are doing the raise. But if you have a co-op where like shared ownership of the company, then the number of people raising suddenly explodes to 5-6 people. I can ask my even for startups, right? Like you have an advisor at like 1%. Well, they might do some raising, but it's not going to be this like hardcore fundraising. If you have a team where people have 10% here, 10% there, right? Like if there is not this one like king on the throne, but you have a general co-op relationship, well, then the fundraiser is going to go. And so I would love to see that as well, kind of also ensuring that the earnings are distributed fairly too.
I think that's a really important point, because we as a fund are looking to not only make investments, but of course, like anyone else, we want to mitigate risk. So the question is, which businesses or opportunities have the best possibilities in communities that are disinvested? So that in itself is risky. So part of our agenda is not only working with an aggregated number of sources of capital like crowdfunding and social enterprise foundations and others, but it's really to work closely and tie in with the community to really know who those players are. And like you just said, co-ops, are outstanding because they are really literally being run by folks in the community. So that's a dual purpose of ours is, again, not just raising capital to get reasonable returns and do social good, but really to make sure we know which are the best opportunities, real estate and or small business wise. And that's very important to us and an advantage.
So if you look at the statistics of the small businesses, at some point I did this little study on which small businesses do best with investment crowdfunding, which industries dominate investment crowdfunding. And something that I thought was really interesting is that, the number one are food, restaurants, cafes, just by the sheer number of them. A little bit below is your alcohol, beverages and whatnot. Understandable because it's social. All of these things are social lubricants, essentially. The part that was interesting was that all of the services around the cannabis industry do very, very well in crowdfunding. It's not the most of them, these businesses doing these raises, but they do very well in terms of how much capital they end up raising, in part because there is a federal ban on banking with them, right? So if you go into a bank and you're like a dispensary, even if the state is legal for weed, the bank is not. The bank is FDIC insured. Federally, they can do this. So their only options are credit unions or crowdfunding. And in crowdfunding, they do very, very well. I don't know if that's relevant for what you guys are building. I think it's. I don't know if Vice deals is necessarily what we should be looking into. But they
So
do well.
you're not suggesting that we put a cannabis shop in every community that we start? So, man, yeah,
Maybe.
I saw the hesitation. But no, it's one of these things where we believe that the primary metric is jobs, and that often requires setting up new businesses or elevating existing businesses in the community. And Steve has been working with a lot of different programs out there across the United States so that we can actually do plug and plays. We can bring in a business in a proven business model that's already been done, 5, 10, 20 times. And it's like a franchise. It's got everything figured out. We're not guessing and so forth. But there's not one in the community, so we're not cannibalizing an existing market that's already there. But we might create 4, 5, 10 jobs, every time we stick a flag in the ground and put a new business in that neighborhood.
It's very interesting, because I've never seen a study like that, but I'm not like a labor economist. I don't know how this stuff works exactly. But I'm thinking about, if you raise money for a cafe, well, it's not necessarily going to be a stable jobs for the people who end up taking the jobs, right? These are, for cafes, these are sometimes seasonal jobs, it's students, etc. Right? On the other hand, if you do like something related to construction, now that's much more long-term employment for some people, right? There's not going to be a flow of, there's not going to be a turnaround. But this is long-term value for the community if the business intends to stay there. So I would be curious to see what small businesses produce this balance of, on the one hand, circulating jobs that allows people to go, to go through them. On the other hand, stable, decently paid, vacation jobs, essentially, right? Like the stuff that they told us not to study when we went to college.
Well,
that's a good point, because another priority of ours, of course, is to invest in businesses that have, promising futures. So, for example, we're working with a number of initiatives that create businesses in communities that have been underserved that serve recycling, so they can recycle all sorts of things and build businesses based on the fact that recycling and trash will never go away. So that's literally, unfortunately, a growing field. So the idea is not just invest in businesses, but invest in businesses that will be there in perpetuity, and you would attract potential workers who know that they're in a stable business sector and would grow and stay with that, and hopefully generate enough of their own income so they become homeowners and so on, et cetera, or make enough money to go to the local cafes that are being created in their community.
As you said that, it occurred to me that maybe one of those next generation businesses is one of those like solar panel servicing things, and this in my mind connected to sorry, I'm back. This in my mind connected to that climate funding portal. Not climate
Yeah.
guys.
Raise green.
No,
Raise
not
Green.
raise, not Raise Green. It's Will Weissman's funding portal that focuses on solar panels in residential neighborhoods. It's an interest. I'm just thinking about like what are the, if you guys, when when this fund is operating, how would you work with different funding portals? Because you could have these like partnerships that kind of like interlink funding portals, right? So you could have like Honeycomb and these guys partnership whereas their funding portals focuses on specifically like put the solar panels on the roofs. There could be another raise that focuses on servicing these solar panels. Right? So it's an interesting like triangulation. Guys, I'm looking forward to whatever you build. We need it.
So cross-pollination is important. So we've got some good people on our team that come from the conventional banking world. And then, of course, we have folks like Bill, who's been a prominent in the crowdfunding world. And again, the panacea is just not one source of capital, but maybe a blend of all this. So, again, that's part of our approach is what pieces can we kind of bring together to reinforce that. And then, of course, some of the platforms that focus on environmental, obviously, would be someone we'd want to get to know and support and reinforce or help promote, given some of the businesses we may be investing in through our funds. So it'd be a mutual collaborative effort and strengthening numbers. So our idea is to replicate this model within as many disinvested communities as possible, but it's not a one size fits all, of course. There's a lot of different blends that are needed for these kind of efforts.
Yeah, so we're coming up to the end of the hour, and this has been a really good conversation about how local capital, community capital, crowdfunded capital can act as a catalyst to help a community turn itself around, but it's got to be something that's undertaken with eyes wide open, that it's not easy. I've never seen an easy crowdfunding campaign, but properly designed, properly integrated with other types of capital and other programs in the community, I think that it becomes not only the only solution, but the best solution out of all the things that are out there. So very much looking forward to doing stuff going forward. As we go into communities, we're anticipating that each fund will be investing in a series of businesses and primarily trying to help them understand how to raise their own money so that they can go out and grow and create more jobs. And looking forward to looking with you, Peter, on that so that we can help as many businesses as possible.
Yeah, and just to quick plug for what we do, Raiseway.app. We are making the platform, the learning management part of the platform, completely free. If you're interested in raising money with investment crowdfunding, if you want to just check out whether it, okay, I'm back. If you want to check out if it makes sense for you to raise money with investment crowdfunding, go there. right now the paywall will show up, but anyone who logs in, you can just message me, Peter@Raiseway.app, and I will provide you with free access. And guys, I am really looking forward to working with all of you on providing the businesses you reach out to and connect with our platform.
Well, thank you.
Teamwork and onward.
Yeah, onward. Yes. Thank you, Bill, Steve. Thank you, Peter. This is the end of this show with the musical chairs of screens and on and off. So we'll add a little more technical challenges to what we do. But look forward to seeing everyone again next week on the Community Revitalization Show. Thank you to our audience for being with us today. And thank you to everyone.